If you are starting from zero and you want to know how to actually begin trading, not what broker to use, not which indicator to download, not which course to buy, but the real, honest, step by step path from nothing to your first properly executed trade, this is that video. I'm going to walk you through every stage in order: what to learn first, what to ignore, how to practice without any losing money, how to know when you are ready to trade real capital, and what the first 6 months of trading correctly actually looks like. No shortcuts, no course at the end. Let's go. The first stage does not involve a chart, a broker, or a single trade. It involves something more important than all of those: your expectations. Most beginners come into trading with one of two expectations. Either they think it is going to be fast money, a few weeks of learning, then consistent profits, or they come in completely overwhelmed, assuming it is impossibly complex and that only naturally gifted people can do it. Both are wrong. The honest truth is this: trading is a learnable skill. It takes time. Realistically, 12 to 24 months of serious, structured practice before most people find consistent profitability. Not weeks, months. If you cannot commit to that timeline, stop here. The market will take your money faster than any other industry in the world from someone who is impatient. But if you are willing to commit, genuinely commit to treating this as a craft you are developing rather than a lottery ticket you are buying, then even everything I am about to tell you, you will work. One more thing before anything else: never trade money you can't afford to lose. Not money borrowed, not money that needs to pay rent, not money your family depends on, only surplus capital, money you are genuinely prepared to lose entirely. This rule is not optional, it is the first condition of trading with a clear mind. Stage 2: choose your market. And I want to be very direct here. Choose one market, not three. Not I will try Forex or crypto and stocks and see that works. One market. The reason is simple: every market has its own personality, its own hours, its own volatility patterns, its own behavior around news events. Mastering one market takes months. Trying to learn five simultaneously means you never truly learn any of them. My recommendation for beginners: start with Forex, specifically the major currency pairs: GBP versus USD, Euro versus USD, USD versus JPY, or at gold, XAU USD. These are the most liquid markets in the world. They trade around the clock, they have tight spreads, and they are the best markets on the planet to develop price action reading skills. Once you are consistent profitable on one pair, and I mean consistently over at least 3 months of real trading, then and only then should you consider adding another instrument. Focus is not a limitation. Focus is your edge when you are starting out. Stage 3: build the right foundation. This is where most beginners go wrong. Not because they don't understand, not because they do not study, because they study the wrong things in the wrong order. Here is the correct curriculum for a beginner in this exact sequence. First, understand how the market works, what moves price, what a candlestick represents, what a pip is, what spread and leverage mean, the mechanical foundation. This takes 1 week if you are focused. Second, learn price action and market structure. This is the most important skill in trading. Learning to read a chart with your own eyes. What is the trend? What are the key levels? What are swing highs and swing lows? What does a break of structure means? This is the foundation of every trade I take. There are full videos on this channel I dedicated entirely to this. Watch them. Third, learn risk management, not as an afterthought, not after you have tried a few trades. Before your every first trade, understand position sizing, stop loss placement, risk to reward ratios, and the 1% rule. Risk management is not the boring part of trading. It is the part of determines whether you are still trading in 12 months. Fourth, and only fourth, learn a strategy, one strategy built on the price action foundation you have already developed, not an indicator system copied from YouTube. A strategy that makes logic sense to you, that you can explain out loud in 30 seconds. If you cannot explain why you are entering in a trade in plain language, you are not ready to enter it. Notice what is not on this list: courses, signals, bots, indicators, copy trading. None of those things teach you to trade. They create dependency. Your goal is independence, the ability to sit in front of any chart on any day and make a rational decision based on your own reading of the market. Stage 4: open a demo account and trade it like it is real money. Every major broker offers a free demo account. You trade on live market prices with virtual funds, zero financial risk. This is where your foundation gets tested. But here is where most beginners make the critical mistake. They trade the demo carelessly. They take random trades. There is 50% of account on a single position because it is not real money. Then they feel ready for real trading and blow a real account in the first week because the habits they built on demo were worthless. The purpose of demo trading is not to make virtual profit. The purpose is to build the habit of following rules precisely under the conditions of real markets. Treat every demo trade as if real money is at stake. Same entry criteria, same stop loss placement, same position sizing, same journaling. If you cannot follow your rules on demo, you will not follow them on live. The money does not create discipline. You create discipline on demo and then you bring it to live trading. Spend minimum of 60 to 90 days on demo before touching real capital. That is not a suggestion. That is the standard. After 60 days, review your trading journal because you have been keeping one and assess you are following your rules consistently. Is your strategy producing positive results on valid setups? If yes, you may be ready to transition. If no, stay on demo. Stage 5: when you are ready to move to real money, choose your broker carefully. This is one of the most important decisions you will make as a beginner, and it is one where the industry is full of bad actors. Here is what actually matters when choosing a broker: regulation. Your broker must be regulated by a credible authority. The FCA in the UK, ASIC in Australia, SISIC in Cyprus, or equivalent regulated brokers are required to keep client funds in segregate accounts. Unregulated brokers are not. If your broker is unregulated, walk away. Spreads and fees. Understand exactly what you are paying per trade before you deposit. Tight spreads on major pair, GBP versus USD, Euro versus USD, are standard on any reputable broker. If the spreads are abnormally wide, look elsewhere. Platform reliability. MetaTrader 4, MetaTrader 5, and CTrader are the industry standards. They are reliable, well documented, and widely supported. Be cautious of brokers pushing proprietary platforms with no track record. Withdrawal process. Before depositing any real money, test the withdrawal process. Deposit a small amount, withdraw it, see how long it takes, and whether there are hidden fees. A broker that makes withdrawal difficult before you are a client will make it even more difficult after. And one more thing, start small, $100 or less for your first live account. The goal of your first live account is not to make money. It is to prove that you can trade your strategy with real money without your emotions taking over. That is a skill that costs money to develop. Keep that cost as low as possible while you are developing it. Stage 6. And this is a section most beginner trading videos skip entirely. Let me tell you what the first 6 months of trading correctly actually looks like. Month 1 and 2, you are on demo. You are building your foundation, learning your strategy, making mistakes with virtual money, and starting your journey. You will feel impatient. Every instinct will tell you to move faster. Do not. Month 3, you are still on demo, but now you are reviewing your journal. You are starting to see patterns in your behavior. The setups you take that should not be taken, the ones you miss because of hesitated, the moments when you broke your rules, and what happened after. This is where real learning happens, not in the trade, but in the review. Month 4, you may move to a small real account. Your first month of live trading will feel completely different from demo, even if nothing about the strategy has changed. That emotional pressure is the lesson. Keep the stakes small while you adapt. Month 5 and 6, you are developing consistency, not necessarily profitability, yet consistency. The ability to execute the same process, trade after trade, regardless of the recent result. That consistency is the foundation of profitability, eventually grows on. None of this glamorous, none of it looks like the highlight reels you see on social media, but this is what building a real trading career actually looks like. And the traders who go through this process, all 6 months of it, are the ones still trading 3 years from now. 6 stages, not 6 days, not 6 trades, 6 stages, each one building on the last. The foundation is the strategy, not the other way around. Every trader who skips the foundation and jumps straight to live trading pays for that shortcut eventually. And the cost is always higher than the time they saved. If you are starting from zero, you are in the right place. Everything you need to build this foundation is on this channel for free. No course, no upsell, just the content. Subscribe. Every video I post here adds something to the foundation you just started building. And join the free TradeX communities. The links are given in the description. That is where I share daily market analysis, answer questions directly, and break down live setups. Drop a comment right now. Tell me where you are starting from. Complete zero? A few months in but lost? Tried before and gave up? I want to know, and I will reply. See you in the next one.